Thank you to my sponsor, Cake Wallet, where you can store, send, receive, and exchange your Monero safely on your iOS and Android devices. Hey everyone, and welcome back to my channel, Girl Gone Crypto. I have David Nage here. Super excited to have you here to chat. You are a principal at Arca and also the host of the Base Layer podcast. So, David, thank you so much for coming on the show today.
It's great to be with you.
So I'm excited to have you on and just get to chat about Arca, Base Layer, but also just in general, like kind of have some interesting conversations that are relevant to our time right now, you know, in the crypto space. And so maybe just to start out, tell us a little bit about what Arca is and what your role is with them, and kind of give us a little overview of what that looks like.
Sure. So before I joined Arca, I was in the family office world. And for those that don't know what a family office is, think of a group of people that work for a wealthy family that might have been, they made their wealth either by creating a company and selling it, or potentially by inheriting it, or other different ways of doing that. And they need dedicated people around them to really customize their investment approach. And so I was in that world for a number of years. And around 2015, that was kind of my entry point. One of the family members actually made an investment in one of the first Bitcoin funds. And for those that don't know their history, 2015 was a auspicious time for Bitcoin. You had the Silk Road, you had the DAO, you had some pretty gnarly things that happened within the Bitcoin ecosystem and then headlines out there. And so what happened is that I spent about 6 months of my life after I found out that that investment was made to really understand what Bitcoin was. And through that, I learned what distributed and decentralized systems were. And I really came up with a thesis that this new architecture, which actually was after 30 years of implementing and testing, it's not brand new. Satoshi Nakamoto did all of a sudden come up with something that was never around. It was actually over 30 years of testing and implementing. But all of that work led to something that I felt could have a huge effect on society and economic systems. And so that really led me into this world further. And what I was trying to find was a way to really implement my thesis that this was going to be that important. And unfortunately, vis-a-vis the family office world, I could not really scale the type of kind of access and capital that I wanted to. And so I decided to leave around 2018 and really pursued a lot of the funds in the space, some of the projects in the space. And I landed with the folks at Arca because what they've been building is effectively a new asset manager for a digital asset world. And so there are asset managers all around the world that manage trillions of dollars out there, but there isn't really an asset management firm out there that provides that type of institutionalization, that risk management that Arca does. And it provides very sophisticated investors, ones that have billions and trillions of dollars, kind of more comfort into the world of digital assets. There's a lot of firms out there that are much more prone to speaking to people that are more digitally native, more crypto native, if you will. And really what we've been trying to do is grow that sandbox. It's great that we have a burgeoning kind of ecosystem of people that are investors and founders, but we need to really grow that footprint massively to really be successful. And to be able to do that, you need to be able to speak the language of people that don't understand different chains, don't understand zero knowledge proofs, don't understand snarks, and don't understand asymmetric encryption. You need to be able to speak a language that they understand, but also really helps them get a foothold into this world. And so that's what Arca was, and that's why I joined. So it is an asset manager. There's multiple different strategies that we deploy. And so that was one of the reasons why, comparable to what I could see back around 2018, that was really the reason why I joined. And that's what I think really makes us special.
So speaking of institutional investors, what do you think are some of the key factors for getting more institutional investors into the space?
So that's changed over the years. So back in the days when I was in those seats, it was kind of, why would I do this? And then it started to transition to, how do I do this? And so that was a really important paradigm shift from why to how. And so what we started to see was the how became a big problem. Custody was a big problem. And I've spoken to many family offices, many institutional investors. When they come to this idea that, okay, wait a second, we kind of want to get access to Bitcoin, we kind of want to get access to digital assets, but this idea of putting millions, maybe more than that, onto effectively a USB stick, which obviously Trezor and Ledger are in many ways, and then kind of storing it away, that is not something that's very comforting to them. They are looking at this asset class as a risk already. And for them, I always talk about career risk. This is something that is out of their normal tendencies. They don't typically have a ton of bandwidth to really focus on it. And so then if you layer in this kind of aspect of, well, you're putting your assets or your client's assets into something, this little USB dongle, and then kind of, tucking it away, that doesn't really work for them. And that's why we didn't see massive adoption, or we didn't see larger assets flowing into the ecosystem for the first few years, kind of around 2016, 17, 18. So custody was a big one. And with the implementation that Fidelity put into place after 5 years of testing was a very, very big focal point last year. Fidelity is a name that all institutional investors know. They've either worked with them before, they traded with them before, they custody with them before. They know the name. And so that was a really big one. And then we've started to see other players in the space like the Geminis. We've seen Anchorage come into this world. Many that are going through the qualified custodian route that are being registered. These are all things, I know there are people out there that are hearing this and like, oh God, that's terrible. Not your keys, not your crypto, blah, blah, blah. I get it. I sympathize with you. But again, you have to put yourself in a seat where you are overseeing billions of dollars for someone that's not you. It's a really different conversation. There's a comfort level that they need to have. They need to be able to feel confident that those assets are safe. And they don't really want to necessarily do that themselves. It's really just, it's a big dichotomy there. And so custody was a massive one. I'd say in terms of institutional adoption, regulatory clarity has also been another big one. Are these securities? Are they not securities? I think we've started to see the SEC and the CFTC opine about that with Bitcoin and Ethereum, that they are not, they're assets and they are not securities. We've started to see frameworks where a network could be in testnet going to mainnet and then launching, and that through that evolution and through that process they may have been a security, and then through the moving to a decentralized process they are not anymore. And so that metamorphosis, if you will. And so we are starting to see pieces of the pie come together in terms of regulatory clarity. And then the last piece I would say, unfortunately, I know a lot of people don't like to hear this, but for institutional investors and for family offices, there's this thing called the cap table. If you're an investor in venture capital, obviously you know about cap tables. And so when you're looking at an earlier stage investment, which many of the institutional investors would view digital assets like Bitcoin and Ethereum, others out there, it is very akin to a venture bet. And with that venture bet, they want to know if there's anybody else in the pool that they know, because they can talk to them, they can share ideas, they can share diligence. And so for many years, there really weren't that many other people that they knew that were in this pool. Or if they were, they kept very quiet about it. Then all of a sudden, over the last year or two, you started to see the emergence of more. You saw the Louis Bacons of the world, from More Capital. You saw, many other people out there. Alan Howard from, Brevin Howard out there was getting into the space. Mark Lasry. And then just the last few weeks, you started to see some really big names like Paul Tudor Jones. I've said this before very publicly again. The letter that he wrote with his deputy, Lorenzo Giorgiani, was massively important to the overall adoption of digital assets within institutional investors. It's a name they know, it's a name they trust, they've traded with them before, and it's someone who is not, in their views, a crypto native. It is someone who is, from the global macro world that gave an amazing dissection of the reason why today it is important to have exposure to this asset class. So those three things really have changed the course of direction over the last few weeks.
Now, I'm glad you brought up Paul Tudor Jones, because that was something I wanted to ask your thoughts on, is the implications that having someone that well respected in the financial sector coming out and saying that he's putting a percentage of his Bitcoin or a percentage of his portfolio into Bitcoin. Do you think that that's creating a sense of, I don't want to say FOMO, but do you think that the ripple down effect of other investors will be like, well, if Paul Tudor Jones is doing it, I better do it? What do you think is kind of that trickle down effect?
It's not necessarily just because he said, oh, I'm doing this, and he was on CNBC right after he wrote the letter and went public. it's because of how he wrote the letter and the reasoning, the rationale why he's doing it right now. And he said very specifically, he spoke about, and I thought it was kind of funny. I think he said magical money that was coming out of the Fed, and we've all talked about the printer goes burr, and we've seen trillions of dollars printing out of thin air. We had Powell come on 60 Minutes a few weeks ago talking about how yes, they can print digitally, and so it was not necessarily just him doing it. It was the rationale, and it was a very, very specific, and it was a very well detail-oriented reason why they went through testing. They compared it to other assets that they felt could be inflation hedges. And so it was a very articulate reason why he was doing it. And it was all the testing that he did that I think is giving people more confidence to actually do it themselves too. FOMO is, something that I think is for a younger generation. I think for a lot of the elder kind of patriarchs and matriarchs of the world out there, they don't really buy into this whole FOMO idea, but they will feel more comfortable knowing that, hey, if they have questions and they don't really know anybody in the space, they can call, PTJ, or they can call someone at Tutor and say, what's going on with this? Why is this happening? And I think they'll have a little more confidence in that ability. But again, it really was the articulation of why he was doing it and in response to the Fed's interventions that I think really spelled the reason why people are interested.
Mm. Do you think that, so when you're having conversations with these larger investors that are, from the more traditional financial sectors, is Bitcoin being a safe haven asset? Is that a question they ask you about? Like, what are some of their thought processes behind why they want to buy Bitcoin and what the driving purpose is behind them wanting to look into that as an option?
So the narrative of its safe haven is something that has been dispelled, has been spelled, has been off again and on again. It's one day or the other. It's like it's 90 degrees one day here in New York, and then it's 60 degrees the other day. There is no consensus, and so I think what people are viewing this as is an asset that is removed from the traditional financial system. And what does that mean? Back in March, when everything went to heck in a handbag, everything began to get to a correlation of one. Everything was selling off. Everyone wanted to remove as much risk as possible. People were raising as much cash as possible. And so everything consistently dumped, and including Bitcoin, because a lot of hedge fund managers who were holding it needed to raise as much cash as possible to cover their margin calls. And so what we started to see is that in the beginning of the year, just going back, we started to see some semblances that, like with the Iran and US conflict, which for me feels like 10 years ago, we started to see some kind of data points where it's like, okay, it started to happen, Bitcoin really didn't react, and then all of a sudden it kind of reacted, and then Trump de-escalated and then immediately sold off. And so we started to see more instances of response from Bitcoin to macro events, whether that's a safe haven or not, but we started to see some of that evidential information happen. Today, I would say in terms of it a safe haven, is it uncorrelated, is it correlated? What I really say, and I think a lot of people respond to this, is that it's untethered. It is an untethered asset to the broad-based public and debt markets out there. It is, obviously Bitcoin is hard capped, it's 21 million hard capped, versus US dollar, which we're seeing right now can be printed to infinity. And so with that, there's a lot of interest because you have something that is very hard capped, that is coded, and it is mathematically set, versus something that people, Jay Powell and others, the president, people can effectively affect in a way. This is not affected. This is code, this is law, this is done. This is 21 million hard cap. This can be massaged, this can be kind of maneuvered to whatever policymakers want to do. And so I think people are starting to understand that there's a very stark difference between those two. And so I wouldn't say that it's a safe haven, but I would say that as I said, it is an untethered asset compared to the other financial tools that are available today for institutional investors.
Do you think that everyone should own at least a little bit of Bitcoin?
I get asked this one every single time. First and foremost, this is not financial advice. Please do your own research. I would say at this point in time, We are in a very interesting world. We are dealing with a global pandemic. We have seen unprecedented activity from our policymakers and our Federal Reserve and our central banks. We were also seeing at the same time massive social upheaval, and rightly so. That there is obviously issues that have been tucked under the rug for many, many, many years that are starting to rise, and we are questioning every single part of institution that we have. We're questioning law. We're questioning government. We're questioning our financial and policymaker decisions right now. Everything's getting questioned. And so for that fact, as I said, in my opinion and, the opinion of others, is that Bitcoin is untethered. When you have so many questions and you have so much volatility, not necessarily price volatility as it relates to equities or derivatives, but when you have so much volatility, I think of Bitcoin, this is my own personal view, Bitcoin to me is like having insurance. There is no specific time that that you'll need it. You can't get hit by a car and then call, Jared with his red shirt on and say, hey, I need insurance right now. No, it's something that you would get ahead of time. You can't buy a house and then all of a sudden it floods and then you're calling someone and saying, hey, by the way, can I get that flood insurance that I kind of put off 6 months ago? No, it doesn't work that way. And so, in my opinion, with all the volatility that we have right now in society and economic systems, Bitcoin is an insurance protection for you and for others out there. And it provides something that is untethered to all that activity.
So I want to pivot and talk a little bit about your podcast for a second, because you have an awesome podcast, which I'll definitely link to below for anyone who hasn't checked it out, called Base Layer. Tell us a little bit about it, like how long you've been running the show, what kind of your purpose and drive is with it, what kind of guests you have on, that sort of thing.
It came about because, again, I wanted to provide education to investors out there that were curious about digital assets, about Bitcoin, about Ethereum, about everything that was happening out there. There was a lot of negative sentiment out there for a long period of time that this was purely associated with drug trafficking and nefarious affairs. And I really wanted to provide a lot of that education. And these shows that you're doing now and other people that are doing it are so great. But back then, there wasn't as much. And so for me, I wanted to provide people with a little bit more ammunition. Me speaking to someone has some level of effectiveness, but if you also are able to leave them with some information or some material that they can also absorb themselves in their own time, that is also incredibly more effective. And so that was really the reason why I wanted to provide a platform for education for investors to understand what was happening in this world and to see the maturation cycles actually unfold before them. And so the types of guests that we had, initially, we were focusing on a lot of the protocols and a lot of the layer 1 and layer 2 solutions out there. We were trying to show people out there that there were use cases for all of these different things, whether they were from supply and logistics to identity, to financial inclusion, lots of other different narratives and themes. What has started to happen over the last year or so is that we've moved to, while still working with a lot of those founders, we've also moved to more investors who are talking about the global macro environment. Just today, I released an amazing podcast with Josh Wolf from Lux Capital. And we talked maybe for about 10 minutes about digital assets, but the other part of it, the first 40 some odd minutes of it, was about what's happening in the world. What is happening from a global macro perspective, what's happening with our governments, what's happening with, COVID, and how that kind of trickles down into different aspects of life. And so I think that's really important because it's not just about digital assets. Digital assets is an incredibly encompassing, important part of this. And as we all know, anyone who's gone down the rabbit hole, it is multidisciplinary. You can't just know about digital assets. You can't just know about consensus networks. You have to know about psychology. You have to know about the history of money. You have to know about politics. There's a grab bag of things here. And one, that's another reason why I love this space. I'm sure you do too. But it's really, it's something that is really encompassing. And I think that's really why, it's so important.
Awesome. Well, David, it has been so much fun having you on my show and just getting to chat and pick your brain and hear more about the whole realm of institutional investors and what that could look like in the space, kind of the trends of how that's changed over the last few years and all the work you're doing at Arca. So, David, where can people go to connect with you online?
Sure. I love being on Twitter. kind of funny. I started experimenting with Twitter about 2.5 years ago, and now it's something that is a part of my daily life. And I'm sure everyone, you know it too, Leah. And so, you can find me at David JNAGE, so David J Nage, on Twitter. You can try to find me on LinkedIn at David Nage. I don't really use LinkedIn as much as I used to anymore. I don't know why, but yeah, you can definitely find me there too. And then, as you mentioned, Base Layer, you can find that on iTunes, on Spotify, any other different places out there. And one other thing that I would ask everyone who's watching this is that if you know about Bitcoin, about digital assets, just try to get it into your daily routine about asking, someone that might not know about it. When we were all kind of getting together, and when you could go and buy a cup of coffee without having to wear a mask and, socially distance and everything like that, I would always make it a habit every day, and not to pester people, but every day I'd say, hey, I'm going to buy this cup of coffee right now. Do you guys accept Bitcoin? Not because I want to spend Bitcoin, just because it kind of invokes a conversation. It starts a conversation. And, I remember we were traveling last year. We were on a beach somewhere, and we were having some lunch with our family. And, the hostess comes up to me. He brings me the check, and I'm like, well, can I pay this in Bitcoin? He's like, huh? And he's like, well, yeah, it'd be great if you could do that, but, you can't right now. And again, I'm not looking to spend my Bitcoin on coffees and meals, but it's a way to really get people into a conversation. And I would encourage everyone, we're trying to really grow this sandbox. I think that's a great way to do it.
I love that. And I've actually never thought of it from that perspective of just asking solely to start the conversation.
Yep.
Oh, that's so fun. I'm actually going to start doing that. So, David, thank you again so much for coming on the show and for that great parting wisdom and thoughts. It's just been a lot of fun to chat with you. And so thank you
Likewise.
again.